Hi everyone and welcome to another Macro Monday. My name's Mitchell Snedden and I'm joined here today by Callum Pickering. Callum, how are you doing?
I'm well, thank you.
That's great. Now this is the first time we've been back in the saddle since the holiday break. Did you go anywhere, do anything?
It's been a while. I was in the US for 3 weeks. Travelled through most of the East Coast, through New York, Washington, Philadelphia. It was good fun.
Excellent. Myself, Thailand, just a bit of food poisoning, but aside from that, we're all good. Now, Callum, looking at some market-moving material coming out this week, we've got inflationary figures coming out on Wednesday. What are expectations here, and what are you hoping to see?
So for headline inflation, the market currently expects a result of around 0.7, with annual inflation increasing to around a 1.7% result. So the quarterly result's quite strong, at least compared to the last few quarters. Annually, inflation still remains below the Reserve Bank's 2 to 3% target band that they want inflation to sit between. But the most important data is probably going to be the core inflation figures, so trimmed mean and the weighted median measures. Current market expectations are for around a 0.5% increase in that measure to be around 1.5% higher over the year. So again, quarterly result not too bad, but that annual inflation figure is still very low.
And what happens if, say, inflation comes in slightly higher than expected or slightly lower than expected? Any impact or meaningful impact on the market?
Well, certainly it's going to affect expectations regarding Reserve Bank policy. So market expectations are 0.7. If it came in at, say, a 0.8 or a 0.9, then that probably makes it less likely that the Reserve Bank's going to cut rates in the near future. If it came in at, say, a 0.5 or even lower than that, then that really increases the likelihood that the Reserve Bank would cut in the next few months.
Okay, so something to keep an eye out. They're coming out on Wednesday. Now, on Friday night, we have another pretty significant number coming out, the US GDP figures. What are your expectations here?
So current market expectations are for a 0.6% result, which is a little bit weaker than we saw in the September quarter, but that was a very strong result. So I think a 0.6 result, if it did come to be, would be quite positive for the US economy. Personally, I think there is scope for it to go a little bit higher based on some of the partial indicators I've seen over the past 3 or 4 months. So it'll be interesting to keep an eye on that because it will potentially affect markets on Monday morning.
Yeah, and if it goes a bit higher, then you can probably see a nice little kick along for the US market and subsequently our own.
Yeah, that's right. That feeds into the existing sentiment regarding the Trump administration and the belief that he's going to deliver a solid fiscal stimulus over the next few years. So you combine a good GDP result with that sentiment and you create a scenario where the Federal Reserve will feel very comfortable about lifting rates perhaps even earlier than expected.
Speaking of, we had the inauguration of Trump just a couple of days ago. The markets have been largely positive since the election in the US. What is your longer-term view, though, on his presidency?
So markets have been very optimistic since the election back in November, but that's begun to fade a little bit over the last week because there is a lack of detail surrounding exactly what Trump plans for the US economy. Taken at face value, his fiscal stimulus program, the infrastructure program, the tax cuts should be fairly positive for the US economy, and that's one of the reasons for that initial optimism. That said, he's going to come up against some opposition in the form of his own party. The Republicans don't agree with the infrastructure program. They don't really agree with any fiscal stimulus policies outside of tax cuts. But even there, the tax cuts proposed by the Republican Party are somewhat less than those proposed by Trump himself. So I think to some extent the markets may have been a little bit too optimistic regarding the Trump presidency. And now there's sort of a situation where they have to wait and see whether he can actually deliver on any of the economic policies that he's proposed.
Excellent. Well, Callum, thanks for your time, and members, we'll catch you next Monday.
Now, I can do one of two things. I can either start spending 100 hours a week trying to find what are the new and emerging opportunities, or I can find someone like Intelligent Investor who's got a track record of doing the work for me. Intelligent Investor's it's my turbocharger.